Hey everybody, this is Roberta Eastman from Home Buyers Inventory, and thank you again for joining us to answer your questions on how to get into one of our rent-to-own homes and other items such as credit and scores, which is the question we're going to talk about today. And again, we do get a lot of this question in regards to, do you look at my credit score? So today I'm going to answer the question, what is a credit score and how is it calculated? You know, a lot of people want to learn more about their credit score before signing up for our rent-to-own program. And I have to share with you, here at Home Buyers Inventory, again, I had bad credit, so we're not really concerned about the low credit score, because one of the things that we do to help you is help you organically increase your credit score over the time period that you're doing the rent-to-own home with us. And we'll talk more about that later. In this one, I want to really share with you, okay, what is your credit score? How does it affect you? And what do the banks and other people look at so that you can get started on helping yourself? And then again, when you're with us at Home Buyers Inventory in one of our rent-to-own programs, in one of our rent-to-own homes, you actually can organically increase your own credit score, and we will help you do that. Because if you wanted to sign up for any one of the services, which there's many services out there, and we'll do another Q&A on that, but you can sign up for one of those services, and it allows us to go in and report your good payments. And we are willing to do that. We report your good payments. So let's go ahead and get you some foundation on your credit score, and then we can talk more about how can you organically do it. So here's an article that will enlighten you on how a credit score is calculated. So as a credit counselor will tell you, your credit score is like a financial ID number. And we are not credit counselors. We have gone to the school of hard knocks. We got our credit counseling from being in the experience of having bad credit and low credit, and having to take the time over a couple of years to get ourselves back on our feet. That's what I had to do. So I'm not your credit counselor. I will help. Once you get into our rent-to-own programs, I can tell you what my experience was. But this article, and answering the question for you today, and what is my credit score and how is it calculated, this was written from a credit counselor. So let's go ahead and find out what they have to say. Now, the lower your score, the less desirable a customer you are, and the worse credit terms you will get every time you wish to get credit from a bank or a credit card company, and so on. I have personally experienced this myself. When I had bad credit, I would go to try to get a car loan, and the interest rate was like out of this world. There was no way. But it was the only way I could get started again. So there have been times when I have taken less than desirable terms in order to help myself get on my feet. But and it is, so this is true. This statement is very true. The lower your score, the less desirable of a customer you are, and then you will get not the best terms. But then by contrast, and the good news is, the higher your score, the more desirable a customer you are, and the better credit terms you'll get every time you wish to get credit. Even if you do a little bit of credit improvement, just a few points, it will be able to decrease your interest rates that you're paying, and you'll have better credit terms. So even just a little bit of work gets you a better loan interest rate. You know, it can truly save you thousands, if not millions of dollars during your lifetime, because you'll be offered the lowest interest rates on things like your mortgage, car loans, and even more than that, your credit cards. While there are some aspects of credit score calculations that are kept secret, we can look at 5 of the main components used by the Fair Isaac Corporation to arrive at your FICO score. And the Fair Isaac Corporation is really that corporation that leads the industry in regards to credit scores and what a lot of the banks look at. So here's some handy information for us to dig deeper into the topic. Credit score basics. Credit scores range from 300 to 850, with the lower numbers being the worst and the high numbers being the best. The 5 components are Payment history contributes 35%, amounts owed 30%. So that means your debt to income ratio, right? You have this much income and you owe out this much. And if that, another word for this is called utilization. If you are utilizing 100% of your charge card availability and credit, then that is 100% you're using. The lower the utilization, the better. And then they also have length of credit history, 15%. So that's why people will tell you not to close out an open credit card that you've had, because the length of time you've had that credit card lends to your history, and that's a good thing. Now, new credit is counting for 10%. So the more credit cards, the more car loans, the more all of that, that counts 10% towards your score. And then types of credit is 10%. And we'll go through each one of these a little bit more. And so you can see exactly what goes to what contributes to each one of these. So payment history, 35% is the contribution. This reflects whether or not you make your payments on time. The more current the information, the more it will count toward your credit score. Therefore, being 90 days late now is worse than having been 90 days late last year. As you can see from this percentage, you never want to be late with any payments on your credit cards, loans, and so on if it can possibly be avoided. It damages your score, and you'll usually have to pay a stiff penalty as well, often $35 to $39 as a late fee with many credit card companies. Amount owed is 30%. So this criteria is mainly in relation to your credit utilization, as I shared earlier. So how much of the credit available to you in your current accounts are you currently using? And here, less is better. Now, the credit counselor and the article indicates that you should try to make sure that your credit to debt ratio is never more than 50% overall. But I can share with you, the banks, they want 42%. So they don't want you spending any more than 42% on credit cards, loans for your car, etc. If you want to be in really good shape, you would be at 33%. So don't spend any more on cars and loans and personal loans. All of those types of things, don't spend any more than 33% of that compared to what you make and bring home every month, your income. So in other words, if you have an overall line of credit of $10,000, you should have no more than $5,000 on the cards. My recommendation is you should have really no more than, say, $3,300. That would be a good, healthy utilization. The sooner you bring down those balances, the sooner your credit score can start to go up. Length of credit history, that's 15% that contributes to your credit score. So the longer your credit history length, the better. For example, having an account for several years has more of a positive impact than having the account for only 6 months. New credit is 10%. So what percentage of your accounts are new accounts less than 1 year old? Now, requesting a lot of new credit cards, for example, sends up red flags and lowers your score because your credit report is marked each time you request credit. This is called an inquiry. And so the more inquiries you have on your credit report, the less your score is. Because every time you apply, it dings your score. The only exceptions to this are if you are shopping around for a car lease or mortgage. In this case, do all of your fact-finding within a month, so it counts as only one inquiry rather than several. Now, the different types of credit you have contributes to 10% of your score. It helps your credit score if you have a variety of credit types. A mortgage, car loan, and credit card are much more favorable to your report than having just 3 credit cards, because what it does is it shows them that you can actually handle different types of credit. Installment, like your car payment, your credit cards is a revolving, and then the mortgage is a mortgage loan. It shows them the difference between the cards and the loans and the mortgage, and that you can handle all of the different responsibilities in getting those types of accounts paid. And you actually have 3 credit scores, one from each of the 3 major credit bureaus, which is TransUnion, Experian, and Equifax. Banks and other lending institutions will use one of these 3 bureaus when investigating how creditworthy you are. To learn more about the credit scores and how this may affect your application with us, you can visit the links below. So each one of us has the right to pull our credit report once a year for free. And you should do this to keep track. You can go to annualcreditreport.com and you can pull your credit report and keep an eye on it. The other thing that you want to make sure that you're looking at too is, depending on what kind of credit you are going after, such as a credit card or a car loan, they are going to pull either what's called a soft pull or a hard pull. If you're looking at opening up a checking account, they use another system called check systems or check matrix. But these soft pulls or hard pulls also affect your credit reports. And each company pulls separately, so there's no way to determine if it's going to be a soft or a hard, other than you can ask the lender, whether it be a credit card company or car loan company or mortgage, what kind of credit are they going to pull, and they should be able to tell you. I wouldn't let it stop me from having my credit pulled at all, but just so you know, again, it really goes back to those inquiries on whether or not they pull from one report or all 3. So for TransUnion, you can visit this website here, transunion.com. For Experian, Experian.com. As you can see, Equifax has a little bit longer. It's equifax.com/home/en_US. A decent credit score from the bank's perspective is about 720 in most cases. Assume that you want to have a credit score of at least 750 for most purposes. The closer you get to 850, the better. But again, here at Home Buyers Inventory, we know what it's like to have a low credit score. So we're not concerned with that, because we're going to help you increase that score over time. And that's why we do the rent-to-own home with a term that's long enough where you can do the work on your credit and get it taken care of. We at Home Buyers Inventory help you get into one of our homes fast, even with a low credit score. You can connect with us at #MoveInWithHBI. And to be the first to know about our available homes, subscribe to our email list. You can reach us at homebuyersinventory.com.